home, fearful of Trump's rhetoric that trade deficits amount to financial crimes or money owed. Catherine Drew, CGTN.
For some extra insight on the impact of US tariffs, we're joined now by Jameel Ahmad, Chief Analyst at GTC, an online trading brokerage. Thank you very much for joining us. We're almost 3 weeks now since what President Trump referred to as Liberation Day, where the US placed tariffs on virtually everyone. How have global financial markets fared thus far?
We've had the sharpest swings in financial market volatility on a number of different asset classes now since, I would say, the panic of the early stage of the pandemic. But if we just focus on the investor mindset, definitely we've changed from the thought process that these tariffs might be a negotiation tool to actually now accepting that these tariffs are going to impact the US economy worse than any other. If you look at the slide, I would say a slump actually in the US dollar. Investors are definitely pricing that in. We've had the US dollar now has fallen 5% in just 1 month. That is the type of move we have not seen for many years. And if you look at a 6-month view of the US dollar, it's lost nearly 6%. So 5% of those losses, the majority of those losses, are just in 1 month based on now accepting that actually these tariffs are going to be passed on to US consumers. Consumer spending is the largest component of the US GDP. Therefore, it's going to impact the US economy the most. But it's not just impacting the US economy. If you look at market fluctuations, because such a swing in the US dollar has meant all of a sudden the euro has appreciated to its highest levels in 4 years. And essentially, we've had volatility across so many asset classes. We talk about cryptocurrencies, global stocks, global financial markets in terms of indices, commodities. It's impacted everything.
Yeah, the ramifications certainly are broad. We're expecting to hear from major institutions such as the IMF over the coming days, which will publish its latest global economic outlook. What are your expectations there?
We're certainly going to see the economic outlook being revised lower. And if you look back towards what we were expecting for the world economy, roughly October, November 2024, the outlook was that we should see somewhere around 3 to 3.2% global growth. Don't be surprised if that gets sharply revised lower just based on this uncertainty. And at the moment, it's uncertainty because many of these tariffs have not been introduced properly. Or if they have been introduced, it's got a 90-day term. We'll see what happens in 90 days. Clearly, many economies are negotiating right now. But this uncertainty for the industries, what it means for economies, what it might mean for job creation, wage growth and so forth, the ramifications are stretching so wide, and I do think the IMF are going to issue concern. We've already heard from the World Trade Organization just over a week ago. They've issued their pessimism, and ultimately, yes, nobody's benefiting and nobody's going to win from a trade dispute like this.
Well, indeed, gold holders are one of the few benefiting at the moment. Once again this week, new all-time highs for gold. The precious metal is up more than 25% already year to date. What are the main factors driving this rally, and are they likely to change in the near future?
Well, whether they're likely to change does depend on whether these tariffs and all this uncertainty gets rolled back. I keep using the metaphor that this is like a long-running TV series, but none of us know where this narrative or the plot's going to twist next. Essentially, investors are loaded into gold positions because of uncertainty. Yes, the gold price has moved up another 25% this year, with the majority of that fire being lit by these trade tariffs and these tariffs that come into place on roughly 3 weeks ago. But we also have other uncertainties too. Like, for example, we've had another plot twist late last week where you had the US president publicly threatening the Federal Reserve Chair, Jerome Powell. That's a huge concern for investor confidence. If Jerome Powell is relieved from his position, then that's going to light another fire for different financial market volatility. And with this tariff uncertainty and not knowing how long it's going to play out, what the impact is going to be on the world economy, I can't see why we would let go of gold positions quite yet. However, historically, it's completely overbought.
We will tune in for the next episode of this fascinating series. Jameel Ahmad, Chief Analyst at GTC, thank you very much for your time, analysis and insight.